Hi, welcome to the market view for the 29th of January 2014. And starting off with the daily chart, we can see that the market is getting into a bit of a sideways trading range. The 166 level is certainly starting to cause this market a bit of a problem. And we saw this yesterday. The market traded up to the 166 or just through it and then reversed on the GDP figures, which came out as forecast. So let's have a look and see what happened in the shorter time frame. We can see that the market rallied on the overnight, which we looked at in yesterday's market view. And then we had this bar here trading up to a high of 166.24, and then we had a PTP sell. The order was filled, and we can see that prices move lower thereafter. The problem is, of course, is that you may have had to have been out of the market before this actually hit. If you were, then the best you could expect is around this bar here, where you would get a break even on this trade. If you stayed with the trade, then of course there was around 40 to 50 points profit on the trade there. So the market, my best case scenario would have been around the break even area because of all of the hype and nonsense that surrounded the release of the GDP figures yesterday. It was all over the Sky News website, and there were one or two other commentators as well giving their opinions as well. So the market moved lower, it found support, and we then see prices moving back up again and then back down, and then we ended up in this sideways range, of which we've been in now for many hours. So the market's doing some funny, curious things at the moment, stuck in these sideways ranges following a news item. So let's have a look and see what we've got for today. The market's trading on the DP, that's the daily pivot, and it's trading above it at the moment, and convention says that if the market's trading above the DP area, then prices are deemed to be bullish. So we'll see what happens as the market trades back up towards the 166 area, and keep this in mind. We've looked at this several times now in the daily chart, and we can see that we are at multi-year highs as far as the pound is concerned at the moment. Let's have a look and see what news we've got out today. There's the nationwide house price index. I expect that to show an increase with the nonsense that the government's doing with lending taxpayers' money to first-time buyers. An absolute joke. Without a doubt, they're doing exactly what the bankers did with their irresponsible, toxic subprime mortgages in 2008. So don't be surprised to see house prices continue at the moment to the upside. The only thing we've got is Carney speaking at midday, 12:15. So the market will be likely to be volatile if he's going to backtrack on other decisions that he's made. The first one being his first one to make a U-turn on is that he would consider raising rates if unemployment dropped to 7%, and have since changed his mind, of course, because unemployment is heading towards 7%, and of course that puts him in a difficult position, because if he increased interest rates, then the housing boom and illusion would be over. So he's changed his mind on that one. So it'll be interesting to see what other nonsense he's got to say at 12:15 as well. We've got the federal funds rate FOMC statement this evening at 7 p.m. as well, so there will be some volatility around that time. If you happen to be in a trade during the early evening, then watch out for this. There's a bit of a problem there, but it's basically saying that the Fed funds rate of 0.25% will remain unchanged, and I can't see that changing either. And I think it's going to be Yellen's first statement as well, so let's see how the market reacts. Okay, that's it for now. If you want to check out the trading results from November, then have a look at the member section of the site. There's a PDF there that you can download. And also we had a few inquiries about the text alert facility. Check out the videos for this as well. You'll see this in the trading section or on the YouTube channel as well, on how to actually set this up so you don't have to sit at the screen all day waiting for a trade. Right, well, that's it for today. Let's hope there's a bit more normality returning to the market. It's been a couple of weeks of quite boring trade to be perfectly honest. The only other thing that I'm going to do is to consider the smaller time frames, which I've spoken of before. That's coming together quite nicely, and also adding a few more currency pairs in as well will liven up the trading opportunities as well. Okay, well, that's it for today. Have a great day. I will speak to you tomorrow, and as ever, thanks for watching.